So cost of capital MCQ revision చేస్తున్నాం. Again నేను ఒక 50 బిట్స్ పికప్ చేశాను అండ్ మోస్ట్లీ ప్రాక్టికల్ పార్ట్ ఆఫ్ ద బిట్స్ అవాయిడ్ చేసాం. మేబీ ఒక 2-3 బిట్స్ ప్రాబ్లమెటిక్ ఉంటాయేమో, బట్ అదర్వైజ్ మోస్ట్ ఆఫ్ దెమ్ థియరీ బిట్స్ పికప్ చేసాం బికాస్ సమ్స్ ఎనీవే క్లాస్ లో చేసి రిపీట్ అవుతాయి. సో అగైన్ ఈ బిట్స్ కొంత ఐసీఏ అండ్ కొన్ని అదర్ బుక్స్ పికప్ చేసినవి. సో మేబీ ఏమైనా స్లైట్ మిస్టేక్స్ ఉంటే విల్ డిస్కస్ త్రూ ద ప్రాసెస్. So which of the following is not an assumption of the CAPM model? So again, CAPM model more discussion is at final level, but basically not an assumption. Capital markets are efficient. This is one of the assumption. Capital markets efficient అన్నప్పుడు basic assumption is that everybody has the same information and markets information మొత్తం capture అవుతుందని, right? So ఏదైతే information availability ఉందో అందరి public availability ఉందని. Investors lend or borrow at a risk-free rate of return. So again, this is one of the assumptions of CAPM. Not an assumption అన్నాడు. సో ఫస్ట్ కాదు, సెకండ్ కాదు. ఇన్వెస్టర్స్ do not have the same expectations about risk and return. In fact, CAPM model says investors have the same expectations. ఇక్కడ do not కాదు, have the same expectations. This is not an assumption. So answer will be C. Very slight chance maybe ఈ బిట్ అడగడానికి ఎగ్జామ్ లో, but just to be clear, A, B, D are supposed to be assumptions under CAPM, but C is supposed to be not an assumption. In fact, reverse is assumption, which is investors do have same expectations about risk and return. As assumptions, so do not call risk free. So ఎప్పుడైతే RM ఇచ్చాడు and equity ఇచ్చాడు K, so RM minus RF into beta plus RF is equal to K. So ఇక్కడ K 15% and beta అడిగాడు. RM is 10 and RF is 5. So 10 minus 5 into beta plus 5%. So 5% of beta, 15 minus 5 is 10. 10 divided by 5, 2 times beta. So answer will be C. So just normal solution. Dash may be defined as the cost of raising additional rupee of capital. So anything additional is supposed to be marginal cost of capital. So my answer will be A. Which of the following cost of capital requires to adjust taxes? Taxation అప్పుడు కూడా మనం కేడీ కట్టేటప్పుడు తీసుకున్నాం, అదర్వైజ్ అక్కర్లేదు. అండ్ తెలుసు ఇంట్రెస్ట్ ట్యాక్స్ షెల్టర్ ఉంటుందని. సో కాస్ట్ ఆఫ్ డిబెంచర్స్. సో ఆన్సర్ ఇస్ సి. మార్జినల్ కాస్ట్ ఆఫ్ క్యాపిటల్ ఇస్ ద కాస్ట్ ఆఫ్ అడిషనల్ రెవెన్యూ కాదు, అడిషనల్ ఫండ్స్, రైట్? సో టు రేజ్ అడిషనల్ ఫండ్స్, వాట్ ఈస్ ద కాస్ట్ బీయింగ్ ఇక్కడ, అది మార్జినల్ కాస్ట్. సో బి. In order to calculate WACC, weights may be based on, weights can be sums చేసినప్పుడు మార్కెట్ వాల్యూ వాడచ్చు అనుకున్నాం, బుక్ వాల్యూ వాడచ్చు అనుకున్నాం, ఆ టార్గెట్ వాల్యూస్ అంటే మీరు ఇంత పర్సంటేజ్ ఈక్విటీ, ఇంత పర్సంటేజ్ డెట్ రేస్ చేద్దాం అనుకుంటే కనుక ఆబ్వియస్లీ దట్ పర్సంటేజ్ కెన్ బి యూజ్డ్ యాజ్ వెయిట్స్ అని, రైట్? సో దట్స్ ర్యాండమ్ ఎగ్జాంపుల్. నాకు 10,000 రూపీస్ క్యాపిటల్ కావాలి, అవుట్ ఆఫ్ విచ్ నేను 5,000 ఈక్విటీ రేస్ చేస్తాను and 2,000 preference raise చేస్తాను, 3,000 debentures. So then 50%, 20%, 30%, ఈ ratio is supposed to be the weight. So answer is any one of the above. So మీరు మార్కెట్ వాల్యూ వాడచ్చు, బుక్ వాల్యూ వాడచ్చు, అలాగే టార్గెట్ వాల్యూస్ ఈ మూడిట్లో ఏదైనా వాడచ్చు. సో ఆన్సర్ is D. Firm's cost of capital is the average cost of, so cost of capital KO, this represents మీ KD ఉంటుంది, కేఈ ఉంటుంది, కేపీ ఉంటుంది, కేఆర్ ఉంటుంది, సో ఎవ్రీథింగ్. సో అందుకని ఆల్ సోర్సెస్ ఆఫ్ ఫైనాన్స్. సో ఏ ఓన్లీ బారోయింగ్స్ కాదు, ఓన్లీ షేర్ క్యాపిటల్ కాదు, ఓన్లీ డిబెంచర్స్ కాదు, సో ఎవ్రీథింగ్. సో ఏ. కంపెనీ హాస్ అ ఫైనాన్స్ స్ట్రక్చర్ వేర్ ఈక్విటీ 70% of its total debt plus equity. So total capital 70% is equity. Its cost of equity is 10% and gross loan is 5%, loan interest is 5%. Corporate tax is 30%. What is the company's WACC? So KO is K into equity percentage plus KD into debt percentage వాడచ్చు. So K is like ఇక్కడ 10% into S by V, which is 70%, plus KD is supposed to be 5% loan, 5 into 0.7, 3.5%, like 1 minus tax, interest rate in 1 minus tax, into dy will be 30%. So is 1.05 plus 7, so 8.05%. So D is the cost of equity capital is all of the following except, so equity is all of the following except another. Cost of equity is the minimum rate that a firm should earn on the equity financial part of investment is correct. A return on the equity financial portion of investment that at worst leaves the market price stock unchanged. So meaning is నేను ఎంత సంపాదిస్తే or ఎంత ఎర్న్ చేస్తే కనుక నా ప్రైస్ విల్ రిమైన్ అన్చేంజ్. సో ఎక్స్పెక్టేషన్ ఆఫ్ షేర్ హోల్డర్ మీట్ అయినట్టని. సో బేసికలీ ఇది కూడా కేఈ, బికాస్ కేఈ ఈజ్ నథింగ్ కూడా ఎక్స్పెక్టేషన్ ఆఫ్ ది ఈక్విటీ షేర్ హోల్డర్. అది మీట్ అయ్యారనుకోండి ఎగ్జాక్ట్లీ, దెన్ మార్కెట్ ప్రైస్ ఏం చేంజ్ అవ్వదు. దానికన్నా ఎక్కువ సంపాదిస్తే ఆబ్వియస్లీ market price will increase, right? తక్కువ అయితే market price will decrease. By far the most difficult component, equity is pretty difficult to, K is pretty difficult to calculate because equity basically doesn't have a pattern, like dividends pay చేయొచ్చు, మానేయచ్చు, అలాగే capital repayment అక్కర్లేదు. Generally lower than before tax cost of debt. So వీడి ఇక్కడ KE less than KD అంటున్నాడు, which is generally not the case. Generally cost of debt is lower than cost of equity. So my answer will be D. What is the overall cost of capital in the firm has 20 crores in long-term debt? So again, basically because it's weighted average cost of capital. Then 1 lakh 10% debentures of 100 each, interest payable for quarter. So maybe miru 1 lakh into 100, 100 lakhs and 1 crore capital, 10% interest and 10 lakh avali. But as 1 year ki quarter and obviously 3 months, so 3 by 12, so 2,50,000. So maybe exam lo koncham chuskovalsindi whether it is for year or quarter. Quarter aithe kanaka answer is B. Beta measures, so two types of risk anukunnam, diversifiable, non-diversifiable. Diversifiable is supposed to be non-systematic risk, and non-diversifiable is supposed to be systematic risk. So ఇది market risk. Market risk is something which is non-diversifiable. So beta measures market risk. So C, which is not diversifiable. Cost of capital may be defined as weighted average cost of all debts. Only debts say kaadu, cost of capital is weighted average of all types of capital. Rate of return expected by equity shareholders. So this seems right. ఇది KE అవ్వాలి. So this is wrong. So rate of return expected by shareholders అంటే KE అవ్వాలి. ఇది obviously KD related. Average IR of the projects, minimum rate of return that the firm should earn. So equity కాదు, the firm should earn. So obviously ఉన్న options లో D seems to be more apt because weighted average cost of capital, cost of all debts అంటే only KD. The rate of return expected by equity shareholders అంటే only KE. So D is minimum rate of return. Cost of capital refers to, cost of capital is not rotation cost, not dividend, maybe the required rate of return. So one options low, so required rate of return can also be your cost of capital. So that seems okay. Then what is the cost of the following method of equity capital is computed? In which of the following method of equity capital is computed? By dividing the dividend by market price. So dividend by market price or net proceeds. ఇది ఏ మెథడ్ అడుగుతున్నాడు? సో విచ్ ఇస్ నథింగ్ డివిడెండ్ yield మెథడ్. సో ఇది డివిడెండ్ yield, ఇది డివిడెండ్ yield డి బై ఈ నాట్ డివిడెండ్ ప్రైస్ మోడల్ అని కూడా అంటాం. సో డివిడెండ్ yield dash is the rate of return associated with the best investment opportunity for the firm and its shareholders that will be foregone if the projects presently under consideration by the firm are accepted. So that is the rate of return associated with the best investment opportunity for the firm and shareholders will be foregone. So if the foregone on, it's an implicit cost. Obviously my answer will be C ani, because it's supposed to be an implicit cost, right? So answer will be C. Cost of capital is equal to the required rate of return on equity in case if investors are only, so KO is KE ఎప్పుడు అవుతుంది అంటున్నాడు, ఓన్లీ ఈక్విటీ ఉంటే అంటే కామన్ షేర్ హోల్డర్స్ ఉంటే or common stockholders unte, then KE will be is equal to KO. Which of the following model or method makes use of beta in calculation of cost of equity? Which of the following model or method makes use of beta in the calculation of cost of equity? So CAPM model, RF plus RM minus RF into beta. So answer is B. Marginal cost is the weighted average cost of new finance raised by the company. So which seems to be okay. And is the additional cost of capital when the company goes for further raising of finance? Again, is the additional cost of capital seems to be okay. With the cost of raising additional rupee of capital, so this also is okay. So answer is D. The cost of equity share or debt is called the specific cost of capital. When specific costs are combined, then we arrive at the overall cost of capital. So obvious answer is C. The KD, KE, KP are specific cost of capital. ఇవన్నీ కలిపి weighted average, its overall cost of capital. If you deduct risk-free return from market return, so RM నుంచి RF చేస్తే and multiplied with beta multiply చేస్తే and again add risk-free. So risk-free add చేస్తే the resultant figure will be nothing but KE model. Sorry, our CAPM model KE. So will be cost of equity. So C. For each component of a capital, the required rate of return is considered to be considered as for each component of capital అన్నాడు. The required rate of return is considered as component cost. So only individual తీసుకుంటున్నాడు కాబట్టి for each component it's a component cost. So answer will be A అని. That is the rate that the firm pays to procure financing. So again, if a firm is paying it, then it is explicit. So now at low explicit because the economic there will not be any outcome as such, or economic is supposed to be both explicit and implicit. So only explicit is where the firm pays to procure financing. So D. Which of the following methods of cost of equity is similar to the dividend price approach? So again, similar to dividend price అన్నాడు. మీకు earnings price is similar to dividend price, except dividend price లో D by P nor, whereas earnings price లో E by B nor. So similar అన్నప్పుడు not same but similar. So దగ్గరగా ఉన్నామని. So maybe C is the answer. In WACC, rising in interest rate leads to. So interest rate పెరిగిందంటే obviously cost of debt పెరగాలి. So A, increase in cost of debt. That is the cost that has already been incurred for financing a particular project. So already incur అయ్యారంటే పాతది. So it's a historical cost. So అదొకటి. Then weighted average cost of capital. Capital components are funds that are usually offered by so stock markets అవ్వచ్చు, KE, capitalist అవ్వచ్చు, exchange index shares only. Investors is a better answer because weighted average cost of capital అంటే KD, KE, KP అన్ని ఉంటాయి. Answer is B. The overall cost of capital is called composite. Composite and కలిపి combined. So again కలిపి. So C. Premium, which is considered as a difference of expected return on common stock and the current yield. So current yield and expected. So current risk premium అది. Common stock మీద expectation minus right now yield ఎంత ఉంది అన్నది current risk premium అది. So అదొక answer. Then which of the following figure is relevant while calculating the cost of redeemable preference shares? So redeemable preference shares కట్టేటప్పుడు which of the following is irrelevant? Irrelevant అంటే EPS is relevant for KE but not for KP. కాబట్టి redeemable preference shares కి EPS is irrelevant. The interest rate that is paid by a firm as soon as it issues debt is classified as pre-tax. Obviously, interest rate that is paid as soon as you issue debt is classified as pre-tax cost of debt. So D, exact interest rate need not be the cost, but unna options will probably the closest one. Which of the following, so on the dividend, which of the following is a controllable factor affecting the cost of capital of the firm? So me control lo undedi, interest rates మీద control ఉండవు, tax rates control ఉండవు. ఈ రెండు ఉండకపోతే all the above కాదు. Dividend policy which you can decide. So obviously answer is A. Which of the following is an uncontrollable factor beyond your control? Investment policy you can control, capital structure you can control, debt service charges. Again, maybe that's negotiable. And you can always control in one way. So ఇది కూడా మీరు బ్యాంకర్ బట్టి కానీ, పర్స్పెక్టివ్ బట్టి కానీ, డిస్కషన్ బట్టి కానీ you can control. So none of the above is uncontrollable. So everything is controllable. So answer is D. Type of the cost of which is used to raise common equity by reinvesting internal earnings. So which is known as cost of common equity. So which is known as cost of retained earnings. So there's supposed to be cost of common equity, right? Then which of the following factors affect the determination of the cost of capital of the firm? So determination of the cost of capital of the firm, general economic conditions, interest rate effect ఉంటాయి. So KDA మారుతాయి. Market conditions again, risk premium effect ఉంటుంది. Operating and financial, so all of them. So answer is D. The cost of equity which is raised by investing earnings internally generated must be higher than what? So any internally generated earnings are always compared with cost of equity. So by default, an answer is cost of equity because internally generated earnings is as good as retained earnings, and retainings are every time comparable with the cost of equity. So it's similar to cost of equity. So the cost of equity which is raised by reinvesting, so obviously it has to earn higher than the cost of new common equity. Maybe logically చూస్తే cost of equity which is raised by internally financing అంటే KR must be higher than the cost of retained. So expectation ఏదైతే ఉందో న్యూ ఈక్విటీ రేస్ చేస్తే అయ్యే కాస్ట్ కన్నా వీడికి ఇచ్చేది ఎక్కువ ఉంటే బెటర్ ఫ్రమ్ షేర్ హోల్డర్ పర్స్పెక్టివ్. During the planning period, marginal cost to raise new debt is classified as, so any planning period అన్నప్పుడు it helps to decide. So it's nothing but relevant cost because debt and borrowing cost are okay, but relevant for the decision making purpose. The offered as cost of debenture not redeemable during lifetime అంటే irredeemable debenture, which is basically interest into 1 minus T divided by P naught. So is answer B. C. B. The risk-free rate is subtracted from the expected market return is considered as risk-free rate subtracted from expected market return is considered as it's a premium because we're adugutunna RM minus RF ఏంటని. So again, ఉన్న options లో market risk premium seems to be more suitable. But there will be people who argue with equity risk premium because we're calculating KE. But what market is earning over and above? Beta to multiply just maybe I can call it equity risk premium, but risk is subtracted from expected. So maybe I will go with market risk premium. A firm's overall cost of capital varies inversely with its cost of debt కాదు అంటే ఇన్వర్స్లీ అన్నప్పుడు పెరిగితే ఒకటి తగ్గుతుంది అన్నాడు, బట్ కాస్ట్ ఆఫ్ డెట్ పెరిగితే ఓవరాల్ కాస్ట్ ఆఫ్ క్యాపిటల్ పెరుగుతుంది. సో ఇది కాదు. ఇది అన్ఎఫెక్టెడ్ బై చేంజ్ ఇన్ ద ట్యాక్స్ రేట్. ఆబ్వియస్లీ is affected because cost of debt మారితే KO మారుతుంది. Is no is other term no is పొరపాటు పడింది. Is other term or is an other term for firm's internal rate of return. Internal rate of return ki maybe it's a close choice. Is required rate of return on the total assets. So this is what the shareholders expect to earn. So maybe unna vaatlo better is D. So it is what the shareholders expect to earn. Key source of value earning an excess return for a company can be attributed primarily to. This is mostly like strategic management, competitive advantage and access to capital. It's okay. Quality management and industry attractiveness. Okay. Access to capital, quality management, industry attractiveness, and competitive advantage. I doubt this will be part of the curriculum, but maybe ఉన్న వాటిలో industry attractive unnari and you need to have an advantage in the competition. Okay. So maybe I will go with D. The weighted average cost of capital results from weighted average of firm debt and equity. A weighted average firm debt and equity capital cost is a double repeat. At a debt ratio of 0, the firm is 100% equity financed. As the debt is substituted for equity and as the debt ratio increases, సో వాడు చెప్తుంది ఇప్పుడు 100% ఈక్విటీ కేఓ. సో కేఓ ఏమవుతుందని డెట్ పెరిగితే ఇంట్రెస్ట్ రేట్ పెరుగుతుంది, బట్ ఈక్విటీ తగ్గుతుంది. సో కేఓ జనరలీ డిక్రీజెస్. సో ఇంక్రీజ్ కాదు, కేఓ డు నాట్ షో కాదు, కేఓ డిక్లైన్స్ బికాస్ ఆఫ్టర్ tax cost of debt is less than the cost of equity, right? So A is the correct bit, correct answer. Overall, WACC is composed of weighted average of the cost of common equity and cost of debt. Okay, common equity and cost of preferred cost of debt, common equity, cost of preferred, and cost of debt. So D seems right. While calculating WACC, the cost of each component of the capital is weighted by relative proportion of type of funds in the capital structure, by the relative proportion of the type of funds to total assets in the capital structure, which is okay, right? So it seems okay, but maybe by the కాదు, so ఇది కాదు, the relative proportion of the type of funds in capital structure. So generally this is supposed to be total assets తో ఇంకేం లేదు, weights కి weight is supposed to be total funds లో ఎంత పోర్షన్ ఈక్విటీ, ఎంత పోర్షన్ డెట్ అది. సో probably I will go with B. So the following formula you will use calculating value. So V కట్టడానికి EBIT by KO. So EBIT అంటే no pad by KO. So B will be the answer. For which of the following costs it is generally necessary to apply tax adjustment to the yield measure, right? So tax adjustment to yield measure అన్నాడంటేనే obviously it is supposed to be cost of debt. So A. The cost of preference share capital is calculated by dividing the fixed dividend per share by the price per preference share and then adjusting risk premium ఉండదు, fixed premium. By dividing the fixed dividend per share by the preference, then adding growth rate ఉండదు. By dividing fixed dividend per share by the price per share, and preference dividend divided by P naught. So this seems okay. By dividing the fixed price per share by the book value because the market value. So C. Which of the following is not a recognized approach for determining the cost of equity? ఒకటి dividend discount model, before tax cost of preferred stock plus. So ఈక్విటీకి అసలు ప్రిఫర్ సంబంధం లేదు. So B seems okay. While calculating WACC on a market value basis, which of the following is not considered? Okay, not considered is reserves with surplus. So మార్కెట్ వాల్యూ వెయిట్స్ వాడితే కనుక రిజర్వ్స్ సర్ప్లస్ ఇగ్నోర్ చేయొచ్చు, ఆర్ టోటల్ మార్కెట్ వాల్యూని బుక్ వాల్యూ ఆఫ్ ఈక్విటీ అండ్ రిజర్వ్స్ రేషియోలో పంచొచ్చు అని. CAPM describes the relation between risk and returns. So CAPM is RF plus RM minus RF into beta, which is pretty much similar to Y equal to A plus BX or MX plus C. So which is a linear relation. So answer is supposed to be A, where the relation that CAPM is supposed to be between risk and return, the CAPM is supposed to be linear.